Good morning and good afternoon, everyone. My name is Trang, and I'm delighted to be your Asia Pacific host for our Refinitiv Perspectives Live 24-hour special. You heard it right. We'll be online for a full day, running a show every hour on the hour from now until 11 a.m. Singapore time. So I look forward to having you all on the various different episodes. Each of the episodes will cover a wide range of different topics impacting financial markets, from region and industry-specific outlooks to the latest tech innovations or the landscape for sustainable investing, amongst others. Be sure to join the event page, which I think my colleagues will share in the chat, to get access to all of the 24 episodes, including replays of episodes you might have missed. And as always, I encourage you to subscribe to our blog to stay updated on future live streams. And to kick us off, I'm really excited to welcome my colleague, Wendy Yamazaki, Senior Director for Industry and Government Affairs for Asia, about economic future look for Asia Pacific. Welcome, Wendy.
Thank you, Tran. Pleasure to be here. So 2020 is a year we never forget, or rather we want to forget. Despite the fallout, I think financial sector in Asia Pacific have surprisingly recovered quite quickly and remained resilient. Generally, I think financial market reform after the financial crisis in 1997 and Asia's experience with the SARS outbreak in 2003 and the global financial crisis in 2008 perhaps had given policymakers some experience and enabled them to actually react better to the situation. Also, the banking sector in Asia are generally well capitalized and sound. So I recall in the early days of the pandemic, central banks in the region actually acted quite swiftly, ensuring ample US dollar liquidity in the financial market. Governments were also able to put in the appropriate stimulus packages and support, and all these have contributed to the stability in the financial market. In particular, the equity market in Asia actually performed quite well in 2020. Our data showed that Asia Pacific equity issuance actually hit a 10-year high of 410 billion US dollars, up 66.5% from a year ago. So overall growth trajectory for Asia in 2021 remains cautiously positive but volatile. I think the region is handling the situation a bit better than our counterparts in other parts of the world. And with the new vaccine being rolled out and the election of a more pro-trade trade administration in the US will help to support stronger growth going forward. I think IMF's view of growth in Asia-Pac for 2021, while overall positive, will be uneven and uncertain across the region. I think I'm just, maybe everyone else is also encouraged to hear positive numbers coming up from China, who has just announced that they are likely to hit 2.3% growth for 2020, possibly the only major country in the world to avoid a recession in 2020. On the other hand, the rest of Asia-Pac economic activity is expected to contract by minus 2.2% in 2020 and to grow by 6.9% in 2021. So the main drivers of growth in Asia-Pac for 2021, in my view, will be the government's strong support for fiscal stimulus policy, push for further digitalization of the economy, and the promotion of sustainable growth. Of course, this is dependent on the vaccine program that's currently being rolled out across the region and how the virus situation eventually pans out. The vaccine is unfortunately no silver bullet. Many challenges remain for many of us. But I think long-term, Asia will continue to remain an attractive market given its huge population size and the relatively young population and the rising income. According to a report, Asia is projected to have the strongest wealth growth in the world over the next 5 years. This will indirectly drive the demand for financial services and data in the region.
Thanks, Wendy. It's great to kind of start the show with some positive outlook for the region. I guess in the area I wanted to kind of find out more about sustainable recovery. So I think a lot of people have asked and kind of considered whether COVID-19 could provide an opportunity to build up better and pursue a more sustainable recovery. And you mentioned around Asia being able to bounce back quite quickly and various stimulus packages being put in place. So what are your thoughts on sustainability in the recovery process?
Thanks, Trent. I think that's a good question. I think 2020 threw the world into chaos with COVID-19 outbreak. But surprisingly, ESG movement in the financial sector has actually gained a lot of momentum. I think there's rising awareness about the role of infectious disease and how it interconnects with the biodiversity loss as well as nature's degradation. And all these have tremendous impact on our economy and businesses. But many policymakers will agree that a green recovery strategy is paramount to achieving a more sustainable economic growth in the long run. So the question is, do we see this underway in Asia Pac? I think definitely. Firstly, we see increase in ESG financing during this period, particularly social bonds. I think this is driven a lot by the increase in capital raising by sovereign, multilaterals and banks to support the COVID relief as well as recovery efforts. Social bond has actually emerged as a useful tool in the fight against the pandemic by mitigating the socio-economic impact of the crisis. So according to Refinitive's data, social bond issued a record of $164.2 billion US dollars in 2020, nearly 10 times the total raised in 2019. And Japan actually stood out as the largest social bond issuer in APAC, followed by South Korea. Secondly, I think we can see, the acceleration of digitalization caused by, the pandemic. Many people are now working from home. People have now moved to online payment because of the use of e-commerce, resulting in contactless payment as the preferred method of transaction. We know that many of the digital payments methods rose to the forefront of the payments pecking order in Southeast Asia in the past year, even outstripping the growth of credit and debit cards in the region for the first time. So we can see that digitalization has actually pushed forward the financial inclusion agenda, one of the key UN SDG goals. A separate report showed that previously cash-heavy countries like Indonesia and Philippines are now switching from banks' traditional prepaid cards to e-wallets. So I think that's a good positive development. Thirdly, the other front is on the infrastructure. COVID has also highlighted the importance of the need for countries to provide smooth transport, connectivity, and utility services amidst uncertainty. It's become even more critical as the supply chain linking sources of production and consumption may break down with the lockdown. To jumpstart the economy, I think many APAC governments are now looking at ways to develop a more robust and sustainable infrastructure investment. For example, India Prime Minister Modi has actually identified infrastructure investment as a key driving force for India's recovery. COVID has thus forced countries in APAC to rethink on the need for long-term solutions for infrastructure challenges that extend beyond the outbreak as part of a wider transformational response. Aligning infrastructure investments and climate policy will be critical for decarbonization. On the other hand, we also should not forget for APAC to continue to invest in digital infrastructure for a future digital world, since technological adoption is likely to continue at an accelerated pace in the post-pandemic era.
Thanks, Wendy. Really comprehensive answer. And we will cover infrastructure actually in our 1 p.m. episode. So if anyone is interested to find out more, do tune in. And I would love to kind of chat to you more about sustainable investing, but I know that we have a couple of more questions coming up. So my next question is really around key focus areas for policymakers in 2021.
Thanks, Trang. Another very good questions. I think, I think pre-COVID, we see the financial sector preoccupied with several regulatory changes, including, the impact arising from climate risk, LIBOR transition, as well as Basel III implementation. The pandemic has unfortunately brought about new policy focus for policymakers in the region. For one, I can see that credit risk, is going to be of a priority. With the liquidity risk abated since the onset of the pandemic, credit risk has now actually emerged. Credit support given by many of the government cannot go on forever, unfortunately. The question is then, when do we remove this support without causing a cliff effect in the banking sector? For example, I just read an article where the Reserve Bank of India had actually warned of deteriorating asset quality and capital buffers. And stress tests indicated that 4 banks may actually fail to meet minimal capital requirements by September 2021 under the baseline scenario. I think this will likely not be the first. Without resorting to pulling the rug underneath the feet, I think government has been exploring ways to address this pressing credit issues. I think one of which is to extend support schemes well into 2021. I read the South Korea Financial Services Commission has actually just announced that it will offer additional lending support, including lower interest rates as well as guarantee fees for small merchants. We also see this in Malaysia and Thailand. So hopefully this will provide some respite to the financial sector. Secondly, I think authorities such as those in Australia and Singapore are now looking at creating new credit risk model or looking at establishing sound collateral management processes with a focus on underlying data that will allow the bank to obtain accurate valuation and project actual loan losses in detail to mitigate credit risk going forward. This is especially important for SME. The Hong Kong Monetary Authority also recently announced the commercial data interchange, and that's one interesting initiative in this space. This will certainly help small business to access financing. I think the second policy focus for policymakers in the region is in the space of payment systems. During the pandemic outbreak, we see a rise in e-commerce, but this has also put pressure for policymakers to step up and put in place appropriate regulations and infrastructure for easily accessible, safe, low-cost, and high-quality services, payment services. And this applies not just for domestic transaction, but also cross-border. So we hear, regional tie-ups between central bank to facilitate cross-border fast payment. MAS and the Bank of Thailand announced in December their instant payment links that would be enabled by mid-2021. We're likely to see more developments on this front. Next, I think the central bank digital currency, which I think many people are very interested in. And the development of CBDC is also in part, response by central banks to enhance the payment system. Central banks issue CBDC to promote financial inclusion. For example, the Bakong issued by the Cambodia Central Bank in October 2020. Similarly, this can also be applied to support safer and more efficient cross-border security settlement. The question for policymakers is then, how do you support this innovative solution while at the same time keeping the payment system safe, efficient, and transparent? I think the third policy challenge for policymakers, from my view, is the increase in financial crime. Digitalization has accelerated the adoption of technology during this COVID period. More people are working from home. There's more online transaction. However, with the increasing digitalization, criminals are also exploiting vulnerabilities opened by the lockdown. We see increase in cyber attacks, money laundering, as well as terrorist financing. For 2020, actually, APAC overtook the US in terms of the value of enforcement actions for the first time since 2015, with regulators imposing approximately US 5.1 billion in fines for AML and KYC violation. In a November 2020 report, the Central Bank of Philippines, or the BSP, noted a surge by almost 57% in suspicious transaction report related to online activities when they were monitoring the trend of financial crimes arising during this COVID period. Similarly, New Zealand Stock Exchange encountered cyber attacks. Trading was halted over a couple of days. I think the solar wind incident is another reminder to banks to step up its security risk management. Pressure has built up for government to double down on their AML, CFT, cyber risk management efforts. So what does this mean for this financial sector going forward?
Wow, plenty to look at for, I think, for 2021. Financial crime, payments, e-commerce, financial inclusion, and so forth. But what do you expect the financial sector to kind of respond to all these regulatory developments?
Tran, I don't have a good answer, but I can have two quick pointers to suggest. One of which is the harnessing of technology and data. I think with the fallout from COVID, being so severe and damaging, and adoption of technology has come at an increasing speed. However, we are also witnessing significant advancement in technology facilitated by innovations such as AI, machine learning, cloud computing, and all these are already underway. In one of Refinitive's report, they actually revealed that machine learning is maturing in financial services globally. And in the Asia-Pac region, companies are now deploying even more sophisticated technologies to drive innovation and gain competitive edge over its peer. Our research also showed that 78% of Asia-Pac firms are making significant investments in related technology, and over two-thirds indicated that machine learning is a core component of their business strategy. So these technology actually enable intelligence to be gathered from vast and often disparate data sets, which will transform the approach to compliance, risk management processes such as KYC, and helping companies to uncover previously hidden patterns and network of potential financial crime activity. So at the heart of this revolution is actually the need to have trusted data, accurate and relevant information, so that the technology can enable people who are responsible to make informed decisions. Conversely, to support this, I think one suggestion for policymakers is the need to put in place policy framework and regulations that are conducive to support the innovation and developments, but at the same time putting in safeguards to ensure the technology is used in a safe and responsible manner. My second suggestion would be for greater collaboration and support of multilateralism. I think the COVID pandemic has been a test, demonstrating that multilateral cooperation is the key to overcoming global challenges. To tackle the COVID pandemic successfully will require global cooperation. We see in November 2020, even during the pandemic outbreak, the region has actually successfully concluded the signing of the Regional Comprehensive Economic Partnership among the 11 countries in the region. And this is a testament on what can be achieved if there's sufficient political will. While we may be separated by physical barriers due to COVID, but I think collaboration will be the way to bring us closer.
Thanks. That's a perfect way, I think, to wrap up our episode, really talking about collaboration and multilateralism. Thank you so much, Wendy, for being here with us today. I hope everyone enjoyed the episode. If you would like to find out more about some of the financial crime trends for APAC that Wendy touched on, we actually have a webinar at the beginning of February, and there is a QR code on screen here, and I think my colleagues will share the link to the registration page in the chat as well. So I encourage you to check it out and register if you would like to. And I'll be back here at 1 p.m. Singapore time to talk about infrastructure investing in 2021. And I look forward to seeing you then. Bye.